With the Dow having made its 60th record high this year recently and the S&P its 56th, short positions continue to get squeezed, with many believing that these indices must at some point pull back. Well, that may well be the case ultimately, but in the meantime, we can now speak to a regular guest, Bryan Noble from tradernoble.com, who is long these indices. Is that right?
Yes. Yeah, but I was here with you, 6 weeks ago. The S&P was trading at 2,500, and we've had a 100-handle rally. The Dow's had a 400-500 point rally in the intervening period. Yeah, you just can't be short. I mean, it makes no sense at all economically with the height of these indices. The S&P is nearly at the third standard deviation. The Dow is not far off it, and yet we just keep going up every day.
So many people are short these indices. I think last time we spoke, you were reminding me that the sentiment wheel showed 85% were short, 75% are short now, these indices. So we've still got a majority of short positions out there.
Yeah, well, people are scared. Everybody you talk to is scared about this market, but as long as we do not have a sell extreme to break some key levels, my key level that I'm watching the Dow really closely is 26,250. As long as we can hold over there, I think this market can go back up to 24,000 and possibly even 25,000 before we run out of steam. But one interesting chart, I was flying over from Dublin this morning, I was doing a bit of research, and an interesting chart I saw was the Fed's balance sheet overlaid on the S&P. And since when the Fed started doing their quantitative easing, the S&P went up, more or less hand in hand all the way up with the two. Now, since they started to cut their balance sheet, we're suddenly seeing the Fed's balance sheet is beginning to shrink, and yet the S&P is up here on its own, way up in an elevated level. If that chart is correct, it's implying that we're going to get a 50% fall in the S&P, and people know this, and they're trying to be short. But you've got to wait until we get the sell extreme first, break some key levels, and then you can go short. Yeah. But we've got the tax bill. Everything is on a promise. We're supposed to get this tax bill this week. The Senate's supposed to approve or disapprove, depending on the case. But it's all been on promises. We haven't seen anything yet.
Yeah. Okay. Let's bring up the chart of the S&P 500. This is the December contract that you trade. As I said, you're long this. Long to where? What are your levels to watch out for?
Yeah, well, I mean, 21 we were here the last time. What you mentioned earlier, the 85% short, which is incredible. It was like a giveaway. That was just say you got to buy the S&P. 85% of your clients being short. It was very hard. If that was the sentiment, replicated around the world, this market was only going to go up. Once we broke 25.20, it was just literally a straight run up to 2,600. We're severely overbought at these levels. My ultimate target, if you measure 26.25 to 26.45, is very strong resistance. Today, I'm a seller. If we get in, when I wrote my commentary this morning, 26.34 to 26.45, in that area, I'd be a reasonably aggressive seller with a 51, with a tight stop, 26.51. Really, to get short of this market, you need to see us break 25.50. We had 2 attempts at that in October, and we bounced off it aggressively. VIX made a new low at 8.5 last Friday, admittedly in extremely thin trading. We closed at 987 last night. So you mentioned that the 56th record high for the S&P in 2017, which is just incredible. And the VIX must be on 35 or 40 days sub 10 in the same period, which is even more incredible.
Yeah. No let up either expected. I mean, it's amazing, all this political risk around the world at the moment, and so much money going into equities. It's just something's not right.
Yeah, well, the problem with interest rates so low. Like, I mean, as we said off camera, if you take the German DAX, the German growth is huge, and yet we bund yields out to 5 years are negative, which just makes no sense. Going back to when I was trading interest rates in the banks, and I was brought up in when UK rates were 15%, and now we're close to zero on everything. So people are just chasing yield.
Let's take a quick snapshot of the currency markets if we can, because you've got a position on the euro dollar. We've seen this channel. In fact, when we last spoke, I think we were pretty much at the top of this level here. I think when certainly we were on our way down at least. But the euro seems to have had this surge recently from the lows we saw back, 7th of November at 115.40. Yeah. Here we are now at 118.80 or something.
Well, with a small head and shoulders, people were, most analysts were forecasting we're going to go down to 112. But the strength of the European growth over the last while has been quite impressive. The OECD ramped up growth in Europe for next year again. So it's very, very hard to be short the euro. Personally, I think the Fed, we're going to see a change of governor. Powell is in front of the committee this afternoon. I think it's going to be the same status quo. He's going to say we're going to hike rates, but they're not going to do it. It's just going to be a slow, move up, and there's so much priced into the dollar curve that of rate hikes, which is not going, in my opinion, it's not going to happen. And I think as the economy starts to slow down in the US, then it's going to be filtered through. We're going to see a weaker dollar, and I think ultimately we'll break 122, the year's high in the dollar, and possibly even hit 130 over the coming months.
130 euro dollar?
Yeah.
Okay, all right, so you're long this position. Going a long trade here, where would you put your stop?
With that 115.40 from the 7th of November low, as long as we can hold over there. On a tighter stop, probably 116.40, as long as we can hold over 116.40. But the major support is the November 7th low.
And of course, fundamentally, the ECB is still pumping in 60 billion at the moment. We know that they've got an eye on tapering that. It's going to cut down. We know that ultimately they want to stop that. But what happens when they stop and they start to pay back the balance sheet?
Yeah, but the problem is they keep saying they're going to do it and they don't do it. Yeah. So it's just pushing. Everybody is pushing the can down the road. We've no German government at this stage. We're unlikely to have one before Christmas. The DAX has got a bit wobbled on the back of it, and then it's still just bounced back again. But I mean, the economic numbers over the last sort of 2 weeks have been very, very strong. So it's very, very hard to be short the euro on the back of that. Interestingly, the DAX is kind of struggling. There's an awful lot priced into the German market, and same with the FTSE. Both the FTSE and the DAX have really struggled over the last couple of weeks, despite the US making record high after record high almost every day.
Yeah, those records, sometimes you see a big drop in the price of gold because money goes into equity markets, money flows around the markets, comes out of gold and goes into equity indices. But remember, gold is rising as well.
Yes, and the problem with gold is it's traded sideways basically for the last 8 or 9 months. We've got big support at 1260, which we reached a couple of weeks ago. We're back up to the top of the channel now, which we hit a 4-week high yesterday, 1299. If we can break the 1300 to 1310 area and close above it for a day or two, then there's quite a possibility that we can rally up to 1360. If you go back over the last 3 or 4 years over the Christmas period, gold tends to make a bottom in over December, mid to late December, and then have a big rally, and same with silver. So it'll be interesting to see if that happens again in January.
Okay, all right, look, Bryan, it's a pleasure. Thanks indeed for dropping by.
Thank you.
On your trip to London. That's at Bryan Noble from tradernoble.com. If you want to catch up with more with Bryan, you can join him on his website.